Hello, my name's Eliseo, and for my individual project, I selected Alan J. Markowitz, CPA. A disclaimer, the purpose of this presentation is to examine the public filings and allegations related to Alan J. Markowitz, CPA, as documented by the Securities and Exchange Commission. By reviewing the facts presented in publicly available documents, the goal is to better understand the professional and ethical issues raised in the case, identified lessons that can help future accounting professionals avoid similar situations in their career. The presentation is based solely on publicly available information and should not be interpreted as a determination of guilt or wrongful doing. The SEC's administrative proceeding against Mr. Markowitz was ultimately dismissed and no final sanctions were imposed. Any discussions regarding the reasons behind the decisions or the actions described in the case represents analysis and assumptions made for educational purposes and is intended to encourage critical thinking about professional judgment, audit quality, professional skepticism, and ethical responsibilities within the accounting profession. So the topic I selected, once again, Alan J. Markowitz. He's a CPA. He was 66 years old when the incident happened. Today, he's probably 69. He lives in Wayne, New Jersey. He's registered as a CPA in New York since 2009, so it's about 17 years, and he's active in New Jersey since 1982, about 44 years. And I found this source and this link. So, background regarding Mr. Markowitz. His education consists of Fox School of Business at Temple University, which is in Pennsylvania. He obtained a bachelor's of business administration, accounting, and finance, and he attended between 1976 through 1979. He previously worked as a partner at uh, Con Resnick, which is an advisory and tax service firm based in New York from 1979 to 2007. And his LinkedIn could be found here. So the incident. So Alan Markowitz, he engaged in improper professional conduct in and within the meaning Section 4C of the Exchange Act and Rules 102E of the Commission's Rules of Practice during the audits of 2016 and 2017. He audited a a company named FTE Networks. And essentially, this FTE company restated their financial statements. And from both audits, Markowitz served as the lead or the lead partner under Markham LLP firm, which is the firm he was under. And he was performing these audits, but failed to maintain the public company accounting oversight board, PCAOB, auditing standards. And so he essentially failed to obtain or act with due professional care. He improperly relied on FTE's management's false representations during the audit, and he failed to obtain sufficient evidence regarding the existence and valuation of unbilled receivables and revenue. Uh, let's see. So, despite not catching these red flags that signal that the FTE was underlying misconduct, Markowitz improperly relied on management's representation and failed to perform procedures to substantiate or reconcile those items essentially. And then lastly, Markowitz also caused Markham to violate Rule 2-02B of Regulation S-X in connection to the 2016 and 17 audits. Uh, Markham issued audit reports that stated that the audits were performed in accordance with PCAOB, which they weren't. So my thoughts, this case highlights the importance of professional skepticism in auditing. Auditors cannot rely solely on management explanation when significant accounting issues or inconsistencies are identified. Sufficient and appropriate audit evidence is critical. Even when management appears to be cooperative, auditors must independently verify material balances and transactions. Also, there were small red flags, and those should have been indicators of larger financial reporting problems. Auditors have a responsibility to investigate unusual transactions and contradictory evidence. The case demonstrates the risk associated with issuing an unqualified audit opinion without fully complying with PCAOB auditing standards. The primary lesson for auditors is that maintaining independence, due professional care, and professional skepticism is just as important as technical accounting knowledge. So, what laws were violated? I dropped out four and then I will go through them. The first one was Section 4C of the Securities Exchange Act of 1934. The SEC alleged that Markowitz engaged in improper professional conduct. And this allows the SEC to discipline accountants and other professionals who practice before the commission. The next one is Rule 102E of the SEC's Rule of Practice. The SEC alleges that his conduct constituted improper professional conduct under Rule 102. And again, the SEC uh, the SEC could have had the possibility to censure or suspend professionals who engaged in unethical or improper conduct before the commission. The third one is causing violations of Rule 2-02BI of Regulation S-X. And the SEC alleged that Markowitz caused his audit firm, Markham LLP, to violate this rule. Markham issued audit reports stating that the audits complied with PCAOB, which they did not. And lastly, uh, the PCAOB auditing standards were also violated, and that consists of AS 1015, and that is due professional care. He failed to exercise professional skepticism and due care. AS 1101, which is audit risk. He failed to reduce audit risk to an appropriately low level. AS 1105, audit evidence. He failed to obtain sufficient appropriate audit evidence. AS 2110, and that is identifying and assessing risk of material misstatement. He failed to revise risk assessment and perform additional procedures after discovering these red flags. AS 2401, consideration of fraud in a financial statement audit. He failed to maintain skepticism regarding possible fraud and improper revenue recognition. And lastly, AS 1201, suspension supervision of the audit engagement, which he failed to properly supervise and perform the audit engagement. So, what were the punishments? So, ultimately, Mr. Markowitz was not sanctioned by the SEC in the proceedings. If he had been proven guilty, they could have they could have suspended him, or they could have barred him from appearing or practicing before the SEC as an accountant under Rule 102E. The SEC administrative proceeding was later dismissed on September 27th, 2024. The SEC docked for administrative proceedings shows an quote order dismissing proceedings as the final entry. So again, no punishment was made for his New York license nor for his New Jersey. And here are some findings. So we see here, this is from the New York website. We see his license number. He is registered and all the way through September 30th, 2027. And this aligns with what I found of his licensure registration from 2009. And there's no enforcements within the New York website. And this is the New Jersey website. And this shows that he's active the year of issuance, which is 1982, and his expiration, he probably has to renew this by the end of the year. And yeah, that's a big 44 years of being a CPA. So post-incident, Markowitz has been working at CBIZ CPAs, PC, formerly known as Markham LP. It got acquired, and and he started as an assurance partner at Markham LP in December 2007, uh, which is the CPA audit firm. And he got promoted to managing director as a shareholder from November 2024 through present, which is the month and year when Markham got acquired by CBIZ. And here's a little overview of CBIZ. It's essentially a firm, an accounting firm that provides tax advisory, employee benefits, insurance, and technology consulting. And again, all this information can be found in LinkedIn. So my personal thoughts, although the SEC proceeding was ultimately dismissed, the allegations emphasize the high level of responsibility placed on CPAs and engagement partners to protect investors and maintain public trust. The Markowitz case serves as a reminder that auditors must independently verify evidence, challenge management's assertions, and respond appropriately to audit risks. Failure to do so can lead to regulatory um, scult sculptancy, reputational damage, and questions regarding audit quality, even if no financial sanctions are imposed. Thank you.